This is Elliot White Sage. I want to go ahead and do a market update. Like always, none of this is financial advice. Always do what's best for you. Um, Real quick market update. So the SPY is in an area where it could bounce. As you know, we have three waves down, and it found support here, and now it's going to either rally to new highs or it will make a wave 5 and rally. The alternative is a 1-2-1-2 massive drop tomorrow. Doesn't seem likely with Apple's news. I'd still be looking for the counter trend. So like I said, you still can't rule out this type of move tomorrow and then up. The other move is this is some type of corrective structure off of this impulse. So there's an impulse leg, there's another leg, there's another leg. So you would have to say something to the fact like this is like a 1, 2, and then like a 3, 4, 5, something like that. You'd have to force it. So just know that that's not likely, but it's possible if it does make a new high. I can only see it get into 420.95. I'll be looking to short anywhere in this zone here. Right now, sidelines and just watch in and go from there. And the Dow Jones, same thing, three waves. It can either extend down in 5 and rally or just rally to new highs. The new highs is very unlikely. It's possible. The technology, again, this could be a 1, 2, we go 3, 4, 5 and finish around 330, or it's already done and then we get 1, 2, 3, 4, 5 to get 5 and then up and then down. The other is 1, 2, 1, 2 and we just crash tomorrow. Don't think that's the case. Looking for a 5 and a rally. If we don't get the 5 in the rally and we just rally, since it's 3 down, the rally has a likelihood of breaking this high right here. Keep that in mind. But it would be a bull trap. It would be a gift for the shorts to have a rally and actually make another high if it happens. IWM. Now this one does seem like it's too shallow. Looks like it should at least have some more upside, and then a catastrophic drop coming. Bitcoin is indecisive, still in this area. I could see 25,200. It's like confused. I think if tech does drop, this will drop. If tech rises to new highs, this will rise to new highs, and I think it rises, ebbs and flows with tech mostly right now, and the dollar. Oil broke this low, confirming the connectors in. This is super bearish for the market. Having oil with this shallow of a connector, this could open up the door to a catastrophic drop in oil prices and energy. Be careful. Here you have a three-wave move. It may make one more high. This would be too bearish in my opinion, but hey, now out of the equation. It is at a resistance area. Gold, I would be careful again. FOMOing in. Remember, you have to look at the larger cycle. Everyone's just looking at what's gold doing right now. You guys pay attention to the larger time frames because you're completing 5 up, right? Look, you have a 1, 2, 3, 4, 5. So the move from 2015 is almost over. When it ends, we should correct back down to 1577, 1540, most likely tagging this trend line. This would coincide with an indices collapse and a risk-off move. So it actually makes a lot of sense in dollar strength. We're in, I think, the final move of that move. It could even already be over since we made all-time highs. To me, Gold's move is not ready for a massive breakout because of the larger cycle that I'm showing you. This cycle should end on this 5th wave. Again, we want to see divergence, and we see that on the daily and on the weekly. Now, if we can erase divergences, then that would change things, but until then, you have this divergence, and you're making a new all-time high in price, that's not a good setup right now. And gold, even though it is exciting and people have been waiting their whole life for this moment, I know gold bugs, that's all they dream about is gold and the end of the world. But what happens in the end of the world is typically deflationary. People go into dollars and cash, the value of the dollar rises, the price of gold falls. It happened time and time again. Every time there's a massive market drop, gold actually falls in price. It doesn't rise. So don't fall into that trap of thinking that gold will moon. Gold will only moon in hyperinflation, and that would have to come through a loss of confidence in our government, in our system, or monetary policy. And then we would look for divergences being erased, and they're not right now. So we're not seeing that. Silver, again, different picture, but it could still be in this wave 2 here, and this could be just a connector. So again, we don't know when this 2 could be done here. It could take another leg lower down to 15 on our risk off move in the indices. It's tough to say. Again, be careful from moment in, but it is exciting. I know it's super exciting, but I'm just very cautious right now on the metals because there's so much news media, FOMO, internet pump in, and it just doesn't feel like a good trade setup. Like it feels like you're chasing the top versus coming in on a move that no one's watching. This is just my opinion. Natural gas is breaking down to mention the expect this, which is also good because then we get this correction over. It looks like it's going 1.5, 1.5, and then should finish finally. Bond market, the 10-year still heading down to this area. We haven't had the 303 moment. I believe when that comes, that's the market, massive drop in the market. So we should be getting there too. Could still come up higher. We'll see. And then the 2-year, every time the 2-year drops, banks collapse. So keep that in mind. And there's still more downside that needs to happen in the 2-year. Looks like to me another 1-2 right there. And another 1-2 right here. The other alternative is it could be a 3-4, right that, get a 5, and then get some kind of relief rally. So we'll see, but more than likely this will break and we'll head to somewhere around 3%, somewhere around there is what I'm thinking. 2.7 before that's all said and done on the 2-year. And unfortunately, though, when that's done, we have much higher rates coming. That's what the chart is telling me. The dollar, it looks like it wants to break down. That should support commodities and inflation and everything else. If I look at the count on the dollar, again, I could force a count that makes the dollar, ready to spike higher. I've mentioned this before. It could be this count 1, 2, 3, 4, 5, and we're ready to have a massive move higher, massive indice crash, risk off. So this is a valid count. The only other alternative count that I can think of is a 3-wave count, where you have some kind of W, X, and you're in some kind of Y here. Or you could even maybe put W there, but wherever you put the connector, you have an A and a B, and you need one more impulse down to finish. So that would be, and then when that's finished, then the dollar's finished. And so how low can it go? It's really tough to say at the moment. maybe 97.4 at the is the lowest. Is the lowest. Uh, the other level that it could end up at is 99.634. But I think the most important thing is divergence will need to be erased on the daily time frame. This will have to take that out, and then you'll know the dollar is done and bottomed. So like I said, it's a couple things. Now, divergence is okay here if it's the previous look where it's an A, B, C. But I'm watching this downtrend line. If the downtrend line breaks, then this isn't the count and it's done. So that's the market overall. Very, very dangerous, guys, to be buying the dip right now. And like I read, the Treasury is running out of money rapidly. They definitely could have the calculation off, or it could change, and you could wake up and find out we're much closer to breaching the debt ceiling than we have expected, and that would create a massive panic. And that's what you're kind of rolling the dice with. To you're betting that they are accurate and know and they're going to manage this right. Why would we believe that? So the XLE bulls last stand. If we break 75, then we're going to go back to the bearish top I had, and that will bring us down to prices in the $50 XLE, which seems to make sense given oil's breaking down. So just keep that in mind. We could still be in this 2 in ExxonMobil. So oil is bearish. Then nothing. We can click on a couple of these, see if there's anything interesting to look at. Nothing good there. Carvana, I think it's pumping after hours. Crocs, keeping an eye on that. 97 for a trade bounce on Crocs. 97. I like that. Again, these are trades. Like I'm not into if you're going to trade individual stocks outside the indices, you can probably get away with that. But the indices, I don't recommend trading on the long side. But if you can get like 97 on it, it could get a bounce and then you could sell it, and that's kind of my strategy. I'm not falling in love with anything right now. Consumer staples, Celsius is holding up pretty well. Should be finishing this wave 5 and then a bigger pullback, which should be a buyable dip again. And nothing else interesting. Interesting. Coke really pumping. Look at that. You don't see a stock like that move that much, typically. Then that's crypto. Nothing to talk about there. Financials, they were weak today. Financials, Schwab, I warned you to keep an eye on it. Now it could still counter trend up. This could be a 1, 2, 3, 4, 5 and up. So it may not have that that huge drop. It looks like COF finally broke this low, put the 2 in place. COF is looking dangerous, looking for this drop. And you're seeing the banks starting to break down, right? Then technology, AMD counter trend rally would be a short idea. Let's take a look. There's your connector here. Since we breached that low, I'm looking for another push down to 72, and we may have already started that journey lower. Then, it seems just likely Tesla's going to breach this low, but it hasn't yet. We'll see what happens here. Apple after hours, I think, was pumping. We had the top here. This could still be a 4 if we could have one more high for 5. And then, so it's a lot of options to finish off Apple. And, Nvidia is weak. Disney looks like you have some kind of 3 up and in a middle Looks like this 2 is going to extend a little higher on Disney. For now, looks like some kind of A, B, yeah, and yeah, maybe A, B, C. So maybe Disney will have a little pump coming. They have earnings coming out. Yeah, maybe earnings will drive it up a little bit. Um, Wayfair, Shopify did really good today. Surprised a lot of people. Um, this looks like 3 up, right? 3 down, 3 up. So again, if you look at this move, you could even say a 1, 2, 3, 4, 5 now with divergence. So if anything, it's positive, very positive. And now, um, it could easily be that, and then you pull back down to 37. But I think this is now, buyable stock with this push to a higher high, and now you have 3 highs. I like that, and I do think it's a buyable dip now after the market corrects, where I think this will hold this low now at 23. So we're looking at somewhere, maybe a pullback down into the 39s. Para got destroyed, and it's in a 3-way move. It's in the buy area, but if it can't hold 1535, then it opens up massive downside, because this will be a connector for the entire move. So it really has to hold 1519. But yeah, you had some weird action in tech today. Some things really pumping nice, some not. Nothing else is really catching my eye. That's my first solar chart. End phase still still weak, which is not surprising. RK, I mentioned, broke the low here. By breaking that low, that should break this low, and if we break that low, then we're looking at more than likely $17-15 in the RK. Very bearish for the overall stock market. That's what, again, looking for 52 PDD, looking to China, not interested yet. KWeb, I want to see KWeb down here where I have this for speculative long bounce trade here. Of course, if we break 16, then it's a lot more problems happening. We did see a nice bounce in NEO today. Let's take a look. I like that for the wave 4. So almost looks like to me, one more push higher. One more push down, and that should do it for NEO. Finally hitting our target area. All right, so I think that ends my update. So what to expect? The market's on the verge of a catastrophic drop or crash, or whatever you want to call it, volatility event. We're in the final innings before that happens, and the idea is, what I'm trying to do is get short when the opportunity presents itself and not chase anything. And if I'm taking a long position, I have really, really tight risk management and money management on that, and that's how I'll trade this scenario. And again, if you're like a day trader, I would wait and see how we open. If we open and push down, you could look for that bullish divergence. If we can keep that divergence, then you could be looking for a wave 5, and then you could try to play the counter trend rally, and then try to get out of that all in the same day. That's the trade setup. Only one I can see is like a day trade setup. If that happens, we drop, maybe it tags 400, right? Something like that. It may not even get there. 401, 402, and then and then you keep that divergence on the 45, and then you try to play along with a very tight stop, and then you look for that bounce, and then you same day take profit. So yeah, it may only make it to 403, 402. That's probably the more likely level right there. So keep an eye on that setup. If it were to just bounce, then I wouldn't. I would just be on the sidelines because it could be too many things, and that's how I would look at trading this. And you have to have a tight stop only because it can always become a 1-2, and if this starts to drop and you buy it here, no, you could be buying a 3 of 3 and get wiped out. So that's why if you're going to try to buy along to play that bounce out, you have to have a stop that's like right below it and just walk away, because this can easily unravel, and bam, before you know it, you're at 388, and that can happen. So just keep that in mind. All right, guys, good luck. Talk to you later.